Hi there! Natural health trends is quite interesting. The market cap is about 81 million. Be aware of this, 81 million. So it's quite small. And this company, this business is paying a dividend over 11%. So far, all good. If you look at their balance sheet, you can also see that they have over 50 million in cash, over 50 million. And compare this amount to the total market cap of only 81 million, this is quite a lot. More than half of the market cap is in cash. And that's amazing. Now, the next question you should ask is this dividend sustainable of 11%? Well, for the last quarter, they announced that they will continue to pay that great dividend, over 11%. As you can see, they declared a quarterly cash dividend of 20 cents per share. As there are 4 quarters per year, this means 80 cents per share. And that's why you see a dividend yield over 11%. And this is amazing. You buy this company with a dividend over 11% a year, and the market cap is quite small, about 81 million. Imagine, from this level, if this company continues to grow, to increase their revenue and earnings, then you can easily have more than 10x on your investment. Because it's quite easy to increase the market cap when it's so small, of about 81 million. And you can easily see, year to date, the stock price is up 20%. Now, if you look at the past history of their dividend, you can see that for the last 3 years, they've continued to pay this nice dividend, over 11%. As you can see, 20 cents per quarter. In 2024, 20 cents per share. In 2020, 20 cents. 2019, 40 cents. Plus 24 cents. And so on. So their dividend is consistent. And that's great. Now, the next question you should ask is their earnings, if they are sustainable. Because as I said, when you look at this business, by the way, I saved this business to look at it later, to see if I can put my money in this company, so I can more than double my investment. And what I found, as I said, it's interesting. This dividend seems sustainable. They have a lot of cash, as you can see here, over 50 million. And the business looks stable. By the way, if you wonder what this company does, you can look at their website. They are selling, as the name says, beauty, lifestyle, and wellness products around the world. For beauty, you can see here their products, BioCell, and others. For lifestyle, another set of products, 2 products, and wellness, collagen, MetaBoost, and so on. And their markets are all around the world. Americas, North and South, Asia Pacific, Greater China, and Europe and Middle East, where there are more countries. So it looks interesting. With such a great dividend of over 11% and the market cap is quite small, only 81 million. If they double the revenue, then you can easily have more than 2x on your investment with this company. Now, let's look more at the balance sheet. As I said, they have over 50 million in cash. That's great. Total liabilities are 28 million. So if you subtract total liabilities from their total cash, they are still left with 20 million, more than 20 million in dollars. So far, all good. Now, let's look at the revenue. The last quarter, Q1 2024, they reported the revenue of about 10 million, almost 11 million in revenue. A decrease year over year from 2023, when the revenue was about 11.8 million and now 10.9 million. But their loss from operations were somehow not that great. There were no earnings, positive earnings. They are making some money, as you can see here, net income. They report some thousands in net income, but this is from their cash on hand, the interest they are getting from this cash. You can also look at their past numbers. The revenue for the last 5 years was about 40, 60, 70 million. And net income, they barely achieved 1 million in earnings. As you can see, for the last 5 years. They also had a huge loss of 5 million. So the revenue have declined over the last 5 years from 70 million to 43 million. And it seems that it continues to do so as the revenue for the first quarter went down. And their earnings aren't that great. They are quite small. They have thin margins. So how are they able to pay this dividend over 11% if their earnings are barely 1 million? Sometimes even smaller than that. Well, if you look at the presentation, you can see that total cash were about 54 million at March 31st, 2024, down from 56.2 million at December 2023, the last quarter, Q4 2023. They are paying this dividend of 11% from the cash they have on hand. So as long as they keep continuing to pay their dividend from the cash on hand, you will get this nice yield, over 11%. This means that they will pay per year about 8 million in dividends, as they are paying 2.2 million in dividends per quarter. So 8 million, it depends on the number of shares. You can assume 10 million per year. It will be paid in dividends. So if you think that they will continue to pay their dividends only from their cash on hand, then for the next 5 years, this dividend is secure. But if they stop paying their dividend, that will be bad because the stock price will go down even more and you won't get any dividend. Maybe they'll stop paying their dividend over 11% and they want to invest this money in new businesses to do more acquisitions. Or maybe they might want to do some buybacks. But so far, they are using the money from the cash on hand to pay their dividend. Because as you've seen, their net income is quite small, about $200,000. And they paid 2 million in dividends. So there is a big difference between their net income and the dividends they are paying. So this dividend is sustainable. For how long? I don't know. Because it is paid from their cash on hand. And if they decide to do something else with this money, then that dividend won't be there. Maybe next year or at the end of this year. That's why it is quite risky to invest in this company only on their dividend. As I said, they have let me tell you exactly, they have 54.4 million in cash so far. And the market cap is only 81 million. If they succeed to increase their revenue and improve their margins, their profit margins, then the stock price will continue to grow. But if the revenue keeps declining, that will be bad. They might continue to pay their dividend from the cash on hand, but as long as the net sales are going down, in the long term, this company won't do well. As you can see, for the last 5 years, their performance weren't that great. An increase of 0.85%. And this is not that great. Of course, if you look at the whole picture, from when this company was founded, the stock price has declined by over 99%. Now, if you look at the number of shares, they don't have that much dilution. They had 10 million in 2010, and now they have 11.4 million. So they are doing great. And the dividend, as you've seen, they've continued to pay their dividend, that nice dividend, over the last 5 years, 20 cents per share. And they may continue to do so as long as they have this cash on hand, over 50 million. But be aware, this is quite risky. Everything depends on the management. If they do want to pay this cash in dividends. If they decide to do something else, to do acquisitions or buybacks, then you have to be aware of this dividend of 11%. Because next quarter, they may announce that they will reduce the dividend or they may cut it, as the earnings are below the dividends they are paying. So it's up to you whether you like this investment idea or not. It looks interesting, as I said. They have a lot of cash, a nice dividend, and the market cap is quite small. But the risk, as I said, is quite high. In the long term, this dividend may be reduced or cut. So that's it for this video, and if you have other questions, please let me know in the comments.